Hello, Maverick traders. Welcome out to your currency midweek for April 13th, 2022. Corey here with you, and it's nice to see all of you again. I was traveling last week. I believe Rob filled in and did well as always, of course, and I'm back. So hopefully, I think the last two midweeks I've had technical problems. I've got all of those fixed, fingers crossed. But for a week or two there, I had all sorts of computer stuff going on. But we're back to normal. No crashing computers, no any of that. Of course, as soon as I say that, it might happen today. But I don't know. I'll start breaking stuff if that does. Now I've taught this midweek for about 10 years and never had any problems, and then 2 weeks in a row I did. So hopefully not to be repeated this time. Let's talk markets. So we're currently in a little bit of a market downturn. I would call it more of a sideways market than than an obvious downward trending market. We'll look at the market charts here in a bit. All of the concerns are currently known to the market. We know inflation's high. We know rates are going up. We know that there's war. We know that these things are bad, but at a certain point, inflation's going to peak. And so a lot of people are wondering if we've hit peak inflation. What does that mean? Well, of course, things go in trends, right? And so inflation's been rising, but a lot of people feel that we've now hit peak inflation, meaning that 8.5 is going to be kind of the top for a while, and that we should head back down into the sevens and the sixes and so on. So at some point, you hit a peak. And a lot of people believe that it's right now. And in fact, we got an inflation number this week, core CPI. The expected number was 0.5 and it came in at 0.3. So there's reason to believe from the data that the inflation is backing up. Now, is that great news? Well, sort of. It's better to not sustain at 8.5% inflation. That's nasty. But even if we go back to 6, okay, and we probably are at or very close to peak inflation, I expect it to back up. But if we go back to 6, hey, that's still 3 times larger than the Fed's mandate, right? Than their goal. They have a goal of 2% inflation. At 6, they're 3 times that, right? 8.5, of course, we're 4 times that. We're over 4 times. So, we're probably gonna see it back up and not gonna stay at this pace, but still running at 6% is just way too high. US dollar is reversing sharply today. It had kind of a deeper pullback. It's interesting. We'll look at some of those charts, but if you follow the Bollinger Band technique, which is just one technique, it's not the end all be all, but it's basically when you're in an uptrend, it's not that it's commonplace, but on occasion, you get a deeper pullback. So if you get, let's say that there's an upward trend in place, on occasion you'll have kind of a deeper pullback and it'll get back to that lower band. And we'll look at the US dollar and its recent kind of setup along those lines. Now we've bounced back up and made a new high. Now we're reversing hard. It's going to be a little bit of a dicey market for a lot of FX. As we look at those charts, unfortunately, when last time I was here, which was 2 weeks ago, we talked about that we're just moving into a little bit more of a sideways market environment, and that's going to make it tough. If you're trading the Japanese yen, we highlighted kind of an extreme exhaustion to the downside. Now, from that exhaustion, we've basically gone sideways. We've bounced for a few days, and then we've sold off for a few days, but we're basically unchanged. And it needs a rest. It needs a breather. It needs a consolidation, and that's the mode that we're in right now. So time will tell. There will certainly be some currencies that are tradable. If you're looking at currency ideas, the Canadian dollar right now looks like one of or the best, I would say. And we'll see if that can continue. But CAD looks like it's more on the strong side than anything else. And there's not a lot to be excited about, unfortunately, in both FX and crypto markets. But if there is something that looks pretty good, CAD, I would say, would be more on the top of my list anyway. Crypto has had a difficult environment, couldn't sustain an attempted move higher. Gold and oil are holding up relatively well. Inverse correlation historically between gold and US dollars. So you'd think US dollar going up, gold would go down. Instead, they've both rallied somewhat together and in tandem. So that kind of speaks, I would say, maybe more to the strength in gold, the fact that it can hang up quite well and is not rolling over sharply, even in the midst of a market where the U.S. dollar has been stronger. Like we talked about, CPI kind of missed expectations. Now let's look at a few things here. So for the week, a little bit of a mixed bag overall. This, I think we've got a typo here. This should actually be a negative. We're down about 1% in the S&P. Crypto down a couple, gold and oil up. If you're looking in crypto space, the only thing that's up this week is Bitcoin Cash. On the FX side, like we talked about, CAD's not having a stellar week, but actually from a chart perspective has really maintained a sideways pattern. Looks like it's basing and could be poised for another move higher. The yen bounced and now it's dropped again, but I suspect that that's more range bound than anything else. We'll look at those charts together and make some of those determinations. So as we look at the S&P chart, it's a mixed picture. This would be kind of a bullish cross. 20 crossed above the 50 and the 20 was sloping upward. But if it was going to maintain an uptrend, it needed to do it right in here. And the fact that you're weak enough to come and break below the moving averages speaks to what I think we're in, which is a sideways market. And my best guess is that it's going to be really choppy. I said this to our stock and options group as well. It's going to be some back and forth trading, in my opinion. And that's not quite as exciting as when we had a real obvious downtrend. I mean, I came into 2022 pretty darn pessimistic. I loved stocks into the end of the year. Historically, when you have a really strong year, you have a pretty good finish. There's a desire by money managers not to underperform and to make sure the market doesn't run away from them. But once the calendar flips, things can change. And they did change, and they changed in a hurry. So this was a more fun trading environment, more energy to it. Now I think we're going to see the process of kind of lower highs, higher lows, and fast forward a couple of weeks from now, and my guess is we'll still be in this general range. You're not going to perfectly flatline. You'll have some drops and some pops, but relatively unchanged is my best guesstimate on how we're going to proceed here in the short term. Pound is bouncing back, but has been in a downtrend. Kiwi's falling, but it had been in an uptrend. Yen is still falling, and it's an obvious downtrend, but my big question is, has it already gone too far? I really like capturing things that are early stage trend, or even what I would consider kind of to be the middle innings. But when you get late innings and the trend and the moves are really, really extended, it's not to say that it can't keep going. Anything's possible, but it certainly, from a risk to reward perspective, it had that big final kind of punctuation type of mark to the downside where it just fell, and kind of had this big exhaustion finale on bad news. Usually from there, there's a lot of this that goes on. It's not that it doesn't maintain some volatility. It probably will maintain some volatility, but that again looks kind of like the S&P, where we might be relatively choppy and sideways. I think in crypto space, it's just mostly selling pressure. There's specific reasons maybe for Bitcoin Cash to have a little bit of outperformance, but for the most part, the crypto markets tried to rebound, tried to establish more of an upward possibility, and just frankly couldn't do it, and kind of disappointing price action really as you look at crypto space, because would have, could have, should have kind of been running higher here for a time. So, as far as the markets are concerned and market outlook, um, I don't think I got this updated, but basically it's not far off. I mean, 20's upward sloping, but we're below it. 50, we're back above it, but I would call these kind of a mixed bag. I'd put them at yellow. And slope wise, I think we're kind of yellow. So to me, we're more on the zero range, just in terms of the markets. Look at the international markets, very, very similar. Look at crypto markets, very, very similar. It's just a mixed bag, below moving averages, above, below, above, below. It's just volatile, but going nowhere. And that's not a great trading environment. I mean, I can't really say that crypto has presented much of any opportunity um, that have been all that compelling. Where it started to look like it could, I mean, this is the phase, this is the area where we could have started to go, and it just didn't have it. It just didn't have enough there. So it is what it is. Sometimes that's the way it goes. As we look at the rest of the calendar here, there, so we talked about in terms of inflation data, what the expectations are, and maybe we're at kind of peak inflation. So PPI, producer price index, higher than expected. So core CPI or PPI, pardon me, higher than expected. So producer prices elevating. You can see CPI came in hot in the UK as well. Those inflation numbers, the expectation that the markets have is that we're hitting a peak. I would say the markets get really ugly if we're not near the peak. And I think we are. I think we're actually seeing some signs. I mean, if you look at lumber prices, they're really dropping sharply. Lumber was, I mean, I guess you could look at it as there's things that we call leading indicators and things that we call lagging indicators, just in terms of the read through that they give. And what was one of the first things that really had an inflation spike? And that inflation spike, or that price spike, captured the news and the media attention. And I would certainly put lumber maybe at the top of that list. I remember lumber just going ballistic. And this was before, I mean, currently we're seeing more of like food prices, people concerned about Russia. And now you're seeing corn and wheat and these things. But lumber, this was, a good year, 2 years, back, that lumber really started to lead the charge. And I remember that the prices were just going through the roof. And of course, the housing market was very strong and so on. It was a leading indicator well before we ever saw inflation even hit 4 and 5 and 6%, let alone 8.5. It really led. Well, it's interesting, you kind of come full circle. Lumber prices are now dropping back, and not, massively, but it kind of led the upturn, and I suspect it's kind of leading the downturn a little bit. Now, I'm not one of those that thinks that ultimately we are going back towards, zero interest rate policy and inflation numbers that are at zero, and we're fighting deflation. I think inflation's here, and it's stickier than, and I think it's got the Fed concerned and all those things. But the good news is some of these things that had kind of led on the upside are actually rolling over. And it's this process, it's cycles that things go through. If you were looking at it from an economic cycle perspective, it makes perfect sense. Home builders or lumber prices would tend to lead and be early in an economic recovery and cycle. What would hit late in the cycle would be more of the commodities that would be things like fuel, energy, oil, etc., even some of the foods and so on. Go back to 2007 and the top in oil when it first went to $147 a barrel. that was booming late in the cycle. That was happening in early 2007, just before the financial crisis. And so these things kind of have that type of approach. So we're more in the late innings of both the economic cycle. That's the bad news, is we're late in the economic cycle, I suspect, which means that, is a recession probably about a year away? Yeah, I think that's what all the signs are leading towards. You don't have, you've never had in history this big of a price spike in things like oil and so on, and not had a recession follow. You're starting to see the classic signs. You'll hear people talk about the the fact that twos and tens went inverted. So the yield curve inversion is a leading indicator of a recession that usually comes, a year or thereabouts later. The classic signs of this. And the thing that the Fed, I think, has done has just fueled more volatility to these. So I kind of look at that as, opportunistic for traders. There's going to be more volatility coming, and when it comes, and when the market gathers more steam to the downside, I suspect stocks have more to go. And that's a bad kind of read through for, your risk on currencies potentially, because things could get really ugly. But I think we're headed towards that big picture, in a year or so. The ECB meeting comes out later this week. We'll be trading that live. Um, there are question marks in terms of whether they can raise rate, what their policy should be, because we don't have as much exposure to Russia here in the US, but in Europe, there's direct correlations. Germany is a major trade partner with Russia, for example. And so this has certainly hit their economy harder. They're going to be slower to move because they just have more of an economic circumstance to deal with. So let's get into it and take a look at a few charts. Does anyone have any names that they want to look at? If so, fire away. In the meantime, of course, we'll pull up the usual suspects and just kind of go through them step by step. It, a lot of this goes rather quickly because it's rather disappointingly non-actionable. Like Bitcoin, I'm really quite disappointed in Bitcoin and cryptocurrencies in general. If you were going to have an opportunity, this would be it. Here is, picturesque, attempted move up. You push up through those. Sure, you can have a pullback, but you should hold here. And it just couldn't do it. You can see the 20 rolling over now. We're back below the moving averages. It's not a real well-defined downtrend, but it's certainly not holding the uptrend either. It's just kind of an ugly process. So if you go through crypto land, the strongest one is the next one, Bitcoin Cash, actually having a nice recovery today. But I wouldn't put it in, rush in to buy category. Where does it put you? Well, kind of on a choppy market environment where you're probably just going to kind of do some of this for a while. Ethereum, I mean, all these others, Litecoin and so on, they're just similar types of charts. If we click through them here, you'll just kind of see that quick approach. Let me say that if willing to buy something, and if you think that there's opportunity in this space, Solana and Ether, Ethereum and Solana would be the two that I would really look at the most, in that at least they held at their 50s. At least they held at this prior level. Now, that doesn't guarantee success, but if you are a, crypto bull and you want to buy something in this space, to me, those are the two cleanest charts. Ethereum to the upside, you can go, SOL, same thing. More of hanging in there, holding on, held at the 50-day MAs, and has more of that setup that I kind of talked about before, that deeper pullback look. Sometimes when you get the deep pullback, it's a really great buying opportunity. Not always, but sometimes it's just that. It's kind of that opportunity to buy that deep pullback for a trade. So look at this. I'm going to pull up a different chart here. See if we can pull it over the top. That's not bringing it up on the chart. Let's try this. I'll just drag it over. Okay. And let's look at a couple of these together. So this is a little different concept. I mean, it's still a daily chart. We teach in the educational classes the Bollinger Band technique, where you have a deeper pullback, possible situation where you get this deeper decline, this deeper pullback, or this deeper rally. And so turn to the daily charts, and this is something that I traded a little bit. Here's Euro USD on the daily time frame. And this is the setup you look for on the Bollinger Band technique. It's basically the setup that's hard to find, but it's one that tends to be quite effective. And it's a pretty simple concept. You can go through the videos, but basically here was a setup. See how you hit the upper band, but you're still below the 50. So the two key factors: number one, you're still in a downtrend. Number two, you're overbought within that downtrend. Okay, great bearish entry. We just had one. See how you hit the upper band, but you're still below the 50. So you're still in the downtrend, but you're at that overbought condition. And see how nice of a trading opportunity that ended up being for Euro USD. Some of these USD charts actually had that type of setup where it was just basically those deeper type of pullbacks where you had a consolidation and an opportunity. So look at this. This is dollar CAD. Aussie USD is pretty close as well, but here's dollar CAD, which I'm just going to kind of skip to it because it really fits more of what we're looking for. Okay, we have the criteria. You're below the 50. In fact, you touch the 50. You're hitting the upper band, so you're overbought within the downtrend. These are hard to find setups and usually lead to more selling pressure. So I am a bear, and one of my best ideas on the list is dollar CAD. You can trade CAD against quite a few different things. CAD to me looks pretty darn stellar for upside trading, and it just happens to meet one of my, more special setups. I think Euro USD, that trade, the same concept, but the trade's already played out. That ship has already sailed. Dollar CAD for the short side, well, that's in business, and that can work its way down towards the lower end of that range at least. So good tradable opportunities there as I see it. And then you could even take it one step further. You could really, let's kind of clean the chart here a little bit and do this. Really, you kind of have an inverse cup and handle type of dynamic. The basic concepts of, you kind of have established a key level of support, and this bounce is a lower bounce. Or some might go ahead and refer to it as a descending triangle. You're just downward sloping, but you've established a support. I don't care what you call it. Any way you slice it, it's basically bearish and suggests that we're going lower, that US dollar will be weaker than Canadian dollar for the coming days and probably couple of weeks ahead. So let's go to Aussie USD. I kind of skipped it, but let's go back to it because it's the same general idea and concept. It didn't quite touch the lower band. It's above the 50. Okay, same concept. This one happens to be bullish, Aussie and USD. It's just the way that the symbols are listed as to whether it will give you the bullish or bearish setup. but it's the exact same principle. And within that, you also have the cup and handle type of look. Do you see it? Big resistance, kind of failed against it initially, pulling back. Here's your little handle. There's the bigger cup, and we should head upward here on out. So I like those. I mean, it's really a US dollar short idea. It's a Canadian dollar is my preferred currency on the long side. And it's a patience trade. I mean, we're talking about a daily chart. So we're talking about a trade that should work its way higher over the next few days to weeks. And it won't be a straight line. It might go up a day, down a day, up 2 days, down a day, whatever, but work its way back up towards not only the top end of the range, but ultimately, if we're right, and these are kind of cup and handles, this thing should accelerate up and through that resistance, which would be, more of a profit taking opportunity. So I hope that was fun. And I see, I'm going to destroy your name. Sorry, Kapilishwar. Hope I said that right. But we looked at Euro USD, just kind of the ship has sailed on that one. But Aussie USD, or my favorite USD CAD, those would be certainly tradable. Now, that's a little different concept, right? So let's come back to these charts, and we can do the same thing, just kind of looking at them. Well, US dollar, we were talking about it on the short side, but ultimately it's at the top end of its range. It's just sideways. So I don't mind being short USD here, because if you believe it's at the top end of the range, it should trade to the bottom end of the range, right? And look at how sideways the moving averages are. This is certainly not a raging bull or bear market. You can't get them any flatter than what those are. You can't get them any closer together than being literally on top of each other. There's just, not much there in the way of momentum. The yen, we talked about it. This to me was the big flurry finish. This was the kind of capitulation, we call it, where anyone willing to sell kind of threw in the towel and said, I give up. Japanese yen will never go higher, which you should have been trading bearishly, and you would be a profit taker, right? You would basically take your profits on that, buy back your shorts, and say, thank you very much. The question is, do we get right back into the trade? If you were going to, you do it on the bounce, and that would have worked. If you waited for the bounce and then you short it, okay, great. You're doing it right. I worry that there's just not much meat on this bone, that you're going to go through a period of a lot of this. This is a gigantic move with a big flurry exhaustion finish. Usually these things consolidate for some time and get really back and forth and ugly. So if you run a big marathon, you need a pretty big breather to kind of rest and relax. Swiss franc, from downtrend to attempting an uptrend, nothing actionable yet. Euro, still in a downtrend, but just basing for now. Not much else you can say about that. Just kind of sideways base for now. British pound, we talked about this one. That look, it's stronger, but it's in a downtrend. So I don't know. What do you make of that? Is it a reversal? Yep, maybe, probably going into some form of an uptrend, but it's a hard one. I mean, there's just not a clear picture there. CAD, there's a reason I like it the best, and it's because it deserves it in my mind. This is about as clean a picture as you can find in currency land. Have we rested well? Yes, we have. Are we accelerating and showing some energy now? Yes, we are. You can see the momentum is there in this thing, breaking out of a consolidation. It has a very good setup, so it's not just trend and velocity. It actually has a strategy that I use that doesn't happen very often, and that's that Bollinger Band short setup on the daily chart. So there's just a lot to like for me in CAD, and I like USD CAD on the short side like we looked at. Aussie, still better than most. My fear is that it's kind of the opposite of it's kind of, you know, if the yen flurry finished downward, I worry that the Aussie kind of had a little bit of a temporary flurry of a finish to the upside as well, but I'd still rather buy that than most things out there. And Kiwi's kind of disappointing. If CAD is number one, Aussie's behind that. Well, Kiwi is kind of some disappointing price action here in terms of its decline. Um, Today's really bad in that we tried to kind of turn up and failed, and now we've turned back down. So from false moves comes fast moves. I mean, I don't know if this is a precursor to more selling pressure, but it's not good, whatever's happening there in the Kiwi. Um, I would be inclined to give that one some time, or if you want a short risk, you got to go after Kiwi. I'll leave Aussie alone, I'll leave CAD alone, but if you want to get aggressive and you want to play one of these more commodity currencies to the downside, I think Kiwi is your obvious candidate for that type of price action. So those are some things to look at, and I hope that was helpful. We had a request for gold. So gold, and I've touched on this a few times. For those of you that are long time in the midweeks and whatnot, we've talked about this pattern, which, by the way, just keeps working. So hopefully you've been on board and you've been making some money. But let me show you. Sometimes you get patterns within patterns. So here is the last 2 years in gold. And you see this picture perfect kind of cup and handle type of dynamic. And it looks like we're going to go up and out. But it's even more than that. Gold is in a cup and handle, not just for this past, year and a half or whatever this is. This cup and handle is actually the small handle in a really mega long-term cup and handle. I mean, look at the long-term chart for gold. So this little cup and handle over the past year and a half is actually the handle portion of this massive cup and handle. Do you see that? These are powerful chart patterns made famous. If you want a book to read, maybe, I mean, it's an oldie but a goodie, and it might have the worst. They used to title books so boring. This is a book that's, I don't even know, 30 years old or something, but it's just called How to Make Money in Stocks. And it was made famous by William O'Neill, who went on to do Investors Business Daily, so on and so forth, and was fantastic. I mean, his results trading cup and handles are phenomenal historically, and there's a reason. It just speaks to what's happening below the surface. When you have a cup and handle, there's a whole dynamic in place. Number one, you establish a major resistance. Number two, you usually initially fail at that level, and most people get really nervous, but then it just creates that small base and eventually explodes through. I don't know, I wish I had a crystal ball and could tell you with absolute certainty when it's going to go and how far it's going to go and so on. But I can make some pretty educated guesses, and my guess is that within the next year, 2, 3, we'll be talking about gold having made some massive, massive move, and everybody will be shocked by it and go, wow, this is, unbelievable. Who could have ever guessed? And so on. And you know what it'll probably do is it'll probably, if you take the size of this range here, 160 to 185, and you target about that much move up above it, call it, that would be 25 points above 185, which would be about 210. And that's a big move. That's a gigantic move that might happen rather quickly. in gold within the next year or two. And by the way, there's a lot of money to be made in the short term off of gold continuing to work higher all the way to that bigger price target. But, that's a pretty good guesstimate as to where it's going to go. Um, Certainly debates as to when it will go and how quick it'll get there and such. But 210 and GLD, which by the way, if you were looking at spot gold prices and just kind of putting these things into perspective, if you make that 25-point jump, it's not out of this world, but a 15% jump to new all-time highs in gold is going to attract even more buyers. So I think that's a very conservative target, but one that's probably going to have a big bursting move of that 10 to 15% spike in very, very short period of time, like within a couple of weeks, and gold's just exploding. And everybody will be talking about it on the news and so forth. And look, we've been buyers of gold. We highlighted this cup and handle. The first time that I started to highlight this thing as a possible price pattern was right here. And I said, I tweeted about it and whatnot, but look, it'll probably fail here and it'll go about 30%. The size of this cup, the handle's usually about 30% the size. So it should go back down towards about 160 or so. And I don't remember the exact details. You can go back through my tweets, I guess, and find it. But it'll probably head back towards about 160, which will be the ultimate kind of buying opportunity. And it sure was. All these dips were buying opportunities since, and I think it's up and away here. So really good price action in gold. Heck, it's going up this week, even with the US dollar going up. So it's already somewhat playing out. The rest of this week. So I mentioned that we have the midweek, or not the midweek, the ECB meeting. We're in the midweek, of course. The ECB meeting, which will be 8:15 a.m. Eastern time. So that will be, for all intents and purposes, kind of the last trading day of this week. Remember that stocks are closed on Friday for Good Friday. So Thursday is kind of the end. Currencies, you'll still have some trading that takes place, but it'll probably be less liquid. And of course, with the holiday, there won't be major economic news and so forth. So it'll probably be kind of the rest of this week is, hey, look, today and tomorrow are it. And then things should quiet down in all likelihood from there as we head into the weekend. Hope you've enjoyed it. Had a good week. It's nice to be back with all of you. I certainly missed it last week when I was traveling, but nice to be back. Good to see all of you. Have a great rest of your week, and we will see you next time. Goodbye, everyone.